In this video, I will share with you the strategy that allowed me to get 7 figures in capital. I'm Edward and I'm a 6 figures funded trader. For some time, I was a 7 figures funded trader. I currently also own my prop firm, which is Got Funded Trader. The only thing that allowed me to go from just being a trader to actually open my prop firm and manage different businesses and also own 7 real estate property is this one strategy. I believe that when we talk about smart money concept, everyone focuses on the wrong stuff. In this video, I will tell you how liquidity plays a huge role in the strategy. By paying attention to liquidity, how I'm gonna teach you in this video, it will change your trading drastically. It is extremely important that you're gonna focus during the whole video, because if you miss only one point of this strategy, it is not going to be profitable. It is time for you to level up your trading skills, and I'm here to help you in this journey. I was like you when I started trading when I was 16 years old. I had no guidance and I didn't know what was actually a profitable strategy. I'm here in this video to show you how you can find an edge in the market and how you can make sure that you're winning way more than what you're losing. You know, in order to be a profitable trader, you need to really focus on the best trades. I was thinking today, I was surfing earlier and I was thinking, if I catch this wave and then I fall down, I will end up way farther down and I will have to paddle out all the way back. And in trading is the same thing. If you actually try to catch a trade and it's not the best trade and it's not the best wave, and you don't select carefully which opportunity you want to take, you will end up way farther and you will need to paddle back out, all the way back out, and lose a lot of energy in order to gain back what you just lost. So for this reason, I want to share with you this one strategy that is going to allow you to be way more selective with your trades, to not stress over trading every single hour of the day, and you will be able to gain way more money by trading less. Check out this video and let me know if you liked it. We're going to build a systematic approach to actually enter, exit the market, and to actually decide whether we want to enter the trade or not, okay? Now, let's start from the fact that candles have a body, a wick to the upside, and a wick to the downside. Now, this is true 90% of the times. Of course, not all candles. Some candles are full candles, but if we go here and we are in the 15 minutes time frame, we can see that majority of the candles have a body, a wick, and a wick. A body, a wick, and a wick. A body, here there is no downside wick, so this can be an exception, and a wick. A body, a wick, and a wick. Body, wick, and wick. Body, wick to the upside, wick to the downside. Body, wick to the upside, wick to the downside. Now, can be smaller, can be bigger, but this is, and then of course there are also some candles that don't have it, but few cases, right? I would say 90% of the cases we have candles with a body, a wick to the downside, and a wick to the upside. Whether it is in the 1 minute time frame, right here, let me actually 1 minute time frame. Perfect. Majority of the candles are as just explained. You can just watch them. Body, wick and wick. Body, wick and wick. Here, there is no wick to the downside. Candle after body, wick and wick. Most of them, 90% of the times, we have candles with the body of the candle, a wick to the upside, and a wick to the downside. This is true in the 1 minute, in the 3 minutes, 5 minutes, 15 minutes, anytime from 1 hour, 4 hours, daily, weekly. Let's go to daily. Right, let's look at daily candles. Daily candles, we have majority of the cases, body, a wick to the upside, and a wick to the downside. Body, a small wick to the downside, and a wick to the upside. Body, wick and wick. Body, wick and wick. Body, wick. Okay, all of them. Not all of them, of course, there are some cases, as we just said. So, for example, here, there is no wick. But in majority of the cases, in almost all candles, whether it is bigger or smaller, we have a wick to the upside and a wick to the downside. Now, we are starting from the assumption that candles have a body and a wick to the upside and a wick to the downside. And the body has an open price then the wick, goes to the downside, and then closes and forms the body and forms the wicks, right? So possibly this candle, the movement of this day is not necessarily this way, but in a general way, in a general explanation, the chart of this day, thinking that this is a daily candle, can be anything. If this is a 1 minute candle, then the 60 seconds of this 1 minute candle went this way. The candle opened, then it had a move to the upside that created the wick, then it had a move to the downside, and then it had another move to the upside, and the candle closed. All right. This can be 60 seconds if this is a 1 minute candle, or this is a whole daily move. Now we want to think about the daily. This is what is important for us. Okay. So we have a daily candle, wick to the upside, wick to the downside. Let's say this is the opening price, depending if where we are opening, if we are opening here or here, depending on the previous candle. We have an opening price, a movement that creates the wick to the upside, a movement all the way down, and then we create the lower wick, and we have the closing price, okay? And we create this candle, and this can be the chart of the day. Now, most of the times, here we have the Asian range, okay? And we have the manipulation of the Asian range where we can find some entries, and we want to play this movement to the downside. Vice versa, if the opening price is down here, we want to catch the lower wick in order to go to the upside and close before there is this daily closure, all right? So looking at this and bringing it to a real example, for example, can be, let's see if I can find anything interesting for you. I had a lot of nice examples, but let's see. We just see day by day. Anyway, let's see the daily. Yesterday's candle. On JPUSD, so maybe it's a little bit clearer, less things on chart. So perfect. Here, this is yesterday. This is yesterday's candle, right? We have the body, the wick to the upside, and the wick to the downside. This is the opening, and then we have the two wicks. What happened during yesterday? Let's go and look. 15 minutes. Perfect. So if you remember, we had the body, the wick to the downside, and the wick to the upside. Here we have the opening price, the Asian range, the wick to the downside, the wick, then we create the wick to the upside, and then we close the day right here. In this case, we have a small body. This is the body of the candle. Since we are basically closing, we are staying in a tight range. We have the wick to the downside, the wick to the upside. Okay. The whole thing, we don't need to memorize this so well. It's not like it's going to play a major role, but it's important to understand that we're going to play in the daily range in order to catch these moves, in order to possibly catch the low of the day or the high of the day in order to actually go the opposite way. Now, I hope that you also had my Discord channel where we had some rules about the days of the week, but I'm also going to teach that here. I'm going to teach it in another lesson, not today. I'm going to teach you some conferences that we can have based on the days of the week and based on timings. Perfect. So what we want to see is that. So yesterday was not a good example. Yesterday was we didn't really have any good example yesterday of a trade. I was marking this high for liquidity, but we had no trade. Now, so let's go and look for a good example right here. This was a good example of a trade that I actually took. So what we had was we have the Asian range. So we have the opening price of the day. Opening price, I usually mark it at 5. as explained in the Discord, but I'll also explain it here since not all the people are in the Discord. With the opening price. So we want to possibly sell above it and buy below. Now, this is not always true, depends on what is actually happening on charts, but I'm going to give you the whole playbook that you're going to need. So here we have the opening price. We have the opening price and we have the Asian range. We go above it. We want to look for a confirmation. Now, please always remember the concept of the daily candle. So we start the body right here. We go above it. Possibly we want to catch the higher wick of the daily candle in order to place sells, go to the downside and close before we have the retracement in order to retrace and create the wick on the lower side of the candle. Now, this already eliminates all the confusion that you can have on the 4 hours direction, or which is the order flow, which is the market structure, all of these things. We're not going to care about that. Those are all concepts that you need to keep in mind because, of course, a good understanding of the market is always needed. But we're going to create a systematic approach for you that is going to work without getting confused. So right here, we go above it. And the next point is differentiating between good entries and bad entries, which is the difference between good change of characters and bad change of characters. Okay. Now, good change of characters take place only after liquidity is taken. All right. So if liquidity is taken and needs to be good liquidity, which we will see, then we get good change of characters. I'm going to teach you both continuation entries on fake change of characters. So for example, here we already have an example of a fake change of character that breaks this previous low and then continues to the upside, even if we are above Asian range, because that's not enough. And a good change of character right here. Okay, perfect. Let's go on the 1 minute. Now, some rules that we want to have are that if the Asian range is trending either to the upside or downside, we're probably going to look for continuation entries, unless we have a clear liquidity grab of a previous high or low. I'm not talking about internal or external liquidity, so I'm not talking about all of these liquidity right here. This is all internal liquidity. I'm not talking about those types of grabs of liquidity, but I'm talking about a major high or major low liquidity grab. If that happens, we're not going to look for continuation trades. Okay. So what happens here? We start the day, we go to the upside, we have a clear Asian range trend. Now, I will put all of these in a checklist in next lessons, but for today's lesson, I will give you an introduction, a big introduction with many things, but a good introduction that you need to start thinking about. The next lessons, we will move on. Here, we have the Asian range trending, so continuations are more likely. And therefore, the only way that I can enter a continuation is by seeing a fake change of character, okay? Fake change of character equals continuation. If there is not fake change of character, then I'm not interested. Here, we break to the upside, we break to the downside, we reach a clear demand, okay? And we continue to the upside. This is a fake change of character. Now, you might say, okay, it's easy that you see it now, that it already happened. Now, of course, I need to teach you. We'll also look at the live market, but first I need to teach you, right? And at the same time, this is a clear fake change of character. Why? Let's give you a small checklist, then we will create a complete checklist in the future lessons. But Asian range is trending. We want to look for continuation trades. Second thing, we can look for continuation trades only if the price didn't take a major liquidity yet. So the major liquidity was up here, and that's why we looked for sells after major liquidity was taken. But since that was not taken until this moment, we can look for continuation trades until this point where major liquidity is taken. What else? It's only 1 minute. What else do we need? We need to see that the demand that is reached below the fake change of Carter is a non-mitigated demand. So if this demand right here was mitigated already, maybe by this move that touched it, or maybe by this move that touched it, I don't know. If it was already mitigated in some way, we're not interested in this. But we can clearly see that this demand is not mitigated. This demand is clear. We have also some imbalance, but with this candle, this demand was never touched, never reached. And at this point, we are interested, okay? At this demand, we can look for continuations. Now, the best possible trade to actually confirm the continuation is if down here, once we reach the demand, we actually see a change of Carter that goes against the fake change of Carter in order to continue with buys. And here is not really clear. I mean, here it happens with this candle, but then we never retrace. We just close the imbalance right here. We perfectly close the imbalance. But okay, it's not so easy. We can get involved in some way. It's not so easy. This is not a so easy confirmation. Here, I will leave it up to your choice. If you actually want to just enter from demand with a pending order, if you spot all of these things, or if you just want to wait for confirmation. I usually want to wait for confirmation. The next point is that here we finally take major liquidity. So even though the Asian range is trending, which is one thing that we want to look for when we want to trade for continuations, and that's why here the continuation is good because we didn't take major liquidity yet. Here, major liquidity is taken. After major liquidity is taken, I will spot more likely good change of Carters than bad change of Carters, okay? Because this is just how it works. Statistics are on our side. Now, notice here that we have a internal breakout structure where a lot of people will get involved. We will never be, first of all, because this is not a change of Carter, so we're not even interested. And second of all, why? The most important thing, liquidity was not taken. Did we take liquidity in any way? No. Here it was taken. Okay, here it is taken right after we break to the downside, 0.5 retracement, premium and discount. I will explain all of these things for the people that don't know yet. I hope that you know majority of this stuff that I'm talking about, but I will explain it. Drop to the downside. Okay, perfect. Now, these are the two types of entries and the only two types of entries that we are ever going to trade. Now, I've shown you two in one day, but trust me that maybe sometimes it happens 0 times in a week, but sometimes it happens twice in a day. So right here, you had both of them, right? I see a message in the chat, 1 second. I'm from Brazil, not fluent in English, but I trade Brazilian market since 2019. My goal is to learn smart money concepts in lower timeframes to have more successful entries. I would like to learn to trade Forex and international indexes. Perfect. Nice. Perfect. So is there any questions so far? Because I'm giving you the introduction. This is the introduction lesson. And in the next lessons, we will put all the things together and we'll create a system which is repetitive and that you just need to meet the conditions in order to get involved in a trade. Use volume. We will use volume as an extra confirmation, but it will be one of the last steps. What is the first step? Look at the Asian range or 1 hour time frame. So be careful, because I never looked at the 1 hour time frame here. As I said, we want to avoid all the confusion that higher time frames can create. So as I said in the beginning, maybe you look at the 4 hours and it's bullish, but then you look at the 1 hour and it's bearish, but then you look at the 15 minutes and it's bullish, and then you look at the 1 minute and it's bearish, and you just don't know what to do. We're gonna build a systematic approach where you don't care about the direction of higher time frames, and we're just gonna play the intraday moves based on liquidity, fake confirmations, and good confirmations. We're gonna build a system that can give you systematic entries, and with these entries, with a good risk-reward ratio, a system that has an edge on the market and that can give you profits long term. Now, I'm not going to tell you that you're going to be in profit every single day. I'm not even going to tell you that you're going to be in profit every single week. Now, if you master it, majority of the weeks should be the case, but I'm not going to tell you that every single week you're going to be in profit. But I'm telling you that this system is going to give you profits if you apply it correctly, and if you stay patient, and if you just take the setups that meet all the criteria. So they're not even directly on the 1 minute time frame. Usually we're going to look from the 15 minutes to the 1 minute. Sometimes I take a look at the 30 minutes, but the whole thing is that the same thing that I see here on the 1 minute, I can see on the 5 minutes, on the 15 minutes. So it doesn't really change, because I go on the 15 minutes and I'm like, okay, this is previous major high liquidity. But then I go on the 1 minute and I see the same thing if I zoom out. So it's not like there is a rule of the time frame, right? I see it clearly between the 30 minutes and the 1 minute for this type of strategy that we're gonna utilize. Okay. Perfect. So what you can expect from smart Excel concepts is to actually understand why smart money itself doesn't work. You're going to see so many fake change of characters that people just teach randomly. You're going to see so many good change of characters, and you're not going to understand why it is good or why it is bad. But here with smart Excel concepts, we're going to have clear entry strategies, clear targets, and clear plans in order to execute this. These colors are the sessions that we want to trade. So in the next lesson, we're going to talk about days of the week, timings in which we want to see these setups happen. And we're going to take a further look into the whole strategy on how to actually, today I gave you the introduction, but on how to actually use the fake change of character to our advantage and how to use the good change of character to our advantage. And we're going to build a checklist in order to actually execute this strategy. Now, so as I said, this is what is going to be in the next lesson. Today was our introduction lesson. I gave you the starting point. I recommend you to go on Telegram channel and to take a look at the document that I sent with around, I believe, 30 charts approximately. And you're gonna start spotting these things if you take a look. Now, what I recommend is to print the charts, not only my charts that I sent, but also your own charts, because if you actually mark up the charts and you print them out, the only thing that will allow you to actually level up and use this system repetitively, so you just use it and spot it easily, and you just every single time you spot these things, you can execute trades, is if you train your eyes to actually see these things. And the only way to train your eyes is to see them a lot of times. So if you watch this video only once, if you watch next videos only once, it's not going to work so nice for you, because only once doesn't really work. So I recommend to watch these videos, these lessons more than once, but at the same time, print charts. I have many. Print charts, and then with the actual confirmations and strategy that we want to use, and train your eyes to see these things. So train your eyes to see when it is a fake change of character, when it is a good change of character, and when it is a good liquidity to target, when it is a bad liquidity to target, all of these things. Now, of course, for now, It was just an introduction. We already covered some of the major things, but we still need to put all the things together. For now, this lesson is over. I will see you in the next lesson. If you have any question, please ask now, and then in a minute I will disconnect. Waiting to see if there is any question, otherwise we will disconnect for today. Can you share chart settings? So I will show it like this, then you can go back in the video. So these are the colors. And background is just black, I believe. And what else do we need? Asian range. Then we have stop loss and take profit. Then for buys. And then my lines are just white. My opening price is pink, like this. And what else? Supply and demand is gray with low opacity. And that's it, pretty much it. Then we have this. I also mark order blocks with this. 0, 1, and 0.5. These are the colors. And last thing, the 0.5 fib level. That's it. These are the things. Perfect. I'll see you in the next lesson. I will announce when I'll actually do it, but it's going to be soon. It's going to be one of these days. So talk to you soon.